Welcome to our 2022 federal budget wrap-up video. I have a feeling this will be the shortest one we've done in the last 10 years.
Yeah.
What did you think of the budget last night?
Oh, I think as expected, it was all about showing the Australian people what the actual government has delivered so they get voted back in. But that's typical of any government in an election year. It was a rehash of some stuff that's already been announced, but I think overall it's been about speaking to the people and about making things more affordable for people.
So what's happening with the economy at the moment?
Okay, so one of the selling points last night was the deficit that they had projected last year was actually a lot lower than had been predicted based on a lot lower unemployment. So it's actually a good thing to actually hear from the government. Inflation is a big issue, and it's probably going to be a continual issue for the next 12 months as bigger things like we all know about fuel prices, about supply chain issues affecting the overall price of things. So for everyone out there, the Bunnings costs are going to go up. It's going to be an ongoing issue. So there was a bit of a cash splash to appease people for helping to pay for those things.
Perfect. And small businesses got a couple of exciting things in the budget, but we should probably preface to say none of this has obviously been passed as law.
That's right.
So anything that we're actually talking about now may not be the case. Last night there were a couple of exciting things for small businesses titled Backing Small Business. And the first one was a skills and training boost. So basically, you get an extra 20% of a tax deduction if you're going to spend money on training and upskilling your employees. And for those of you who may not know what a 20% extra kind of boost means in dollar terms, we've got a little example here. So if you basically pay $1,000 for a training course for someone, and of course you operate as a company, which means you're paying 25% company tax, then you're going to effectively get $250 back on tax under the normal circumstances. So in this new regime of a 20% bonus, your tax deduction is $1,200, which means you get $300 back on tax. So for every $1,000, it's basically an extra $50 back on tax. As per usual, you have to actually be making profit and therefore paying tax for this to be a good incentive. But it is something that's certainly helpful for people as they continue to upskill and train their employees. So that is fantastic.
You can't get a better incentive than that, really.
Definitely not. So on the same realm and theme, there was investment in digital technology. So there's been a lot said over the last few years about the fact that small businesses, medium businesses, all need to continually upskill and change their business practices to do more with technology. We've been banging on about this for the last 10 years with our nice little theme of be an admin. So similarly to the training and skills boost, any businesses who are investing in digital technology, so that could be a piece of equipment, it could actually be an online sales platform tool, or basically any digital tool that you're implementing in your business, cloud computing, etc. Same deal applies. So it's an extra 20% tax deduction for basically doing that investment, but this is actually capped at $100,000 per year. So if this is passed in the budget, both of those two things effectively start last night.
Yeah.
Which is great. The skills and training gets you all the way through to 30 June 2024, and the digital technologies goes through to 30 June 2023. There is one catch here, and that one catch is that any money you spend now, so now between last night and the 30th of June 2022, you don't get to claim the tax deduction in the 2022 year. You will actually claim that in the 2023 year. So still get to claim it, still a nice tax incentive, but you're not effectively going to get that money back until the 2023 year. Nonetheless, we love anything that is supporting, boosting productivity and banning admin.
And it certainly supports everything that we've been standing for the last 10 years. So
definitely.
It's a step in the right direction as far as we're concerned. And they're also talking about that training and extending it. So what was the news last night about the apprentices?
So for the last couple of years, we've had this apprentice and trainee scheme that lovely Erin in the office has been helping all of our clients with the paperwork each quarter. Basically, employing a first-year apprentice, you get up to $7,000 back per quarter for the first year of their apprenticeship, and that amount you get back is based on 50% of the apprentice's wages. That was due to finish on the 31st of March. That's been extended to the 30th of June, and the extension also covers the additional amounts of 10% of their wages for the second year and 5% for the third year. So it's good that it's been extended to the 30th of June. The bad news, though, is it hasn't been extended further, and the new scheme that is set to come in from the 1st of July is a lot worse. So there's no more 50% subsidy. So if you are an employer at the moment who is thinking they definitely need an additional apprentice, we're going to be saying let's do that before 30 June rather than waiting.
Good. All right, and there was a small little tweak to the taxes and how people are paying them, particularly on the business side of things. Yeah,
so definitely not exciting for this one. There's been a change to the quarterly pay-as-you-go instalments. So normally every year, if you have a tax bill, the tax office says, here was your last year's tax bill. They add 10% to that. They divide it by 4, and that's the amount they make you pay on a quarterly instalment towards your next year's tax. Instead of it being 10%, they're going to reduce that to 2%. But at the end of the day, it just defers the tax that you're going to need to pay. There's no tax break. Yep. It just means you're paying less next year, and then you'll be doing a catch-up payment when you lodge your tax return the final year. So
sounds better than it is.
Definitely sounds better. So tell us what's happening with employee share schemes.
There was a few little tweaks last night about increasing the availability and the amounts that people can actually give their employees and also their contractors. So that was new last night. So another little incentive for employers to retain and keep key staff in their business.
But no actual tax concession changes, which is, I think, what everybody was desperately hoping for. There has been a little bit of additional funding allocated for the Export Market Development Grant, though.
Yeah. So they've put another $80 million into the program, which is actually really helpful for a lot of our clients who have been applying for it and receiving the grant over the last couple of years. And it's really helpful, particularly for a small business that's actually looking to expand and go global with their business, that the actual government's on board with it for a change. So that's a positive sign.
Which is good. Slight tweak to the patent box stuff that was announced last year as well. The change is they're just adding a couple more styles of patents, which is good, but again, industry consultation for that one, so we don't really have a lot of detail around the logistics of how that will work. And there was a few announcements about cutting red tape. These, however, are not going to start until probably the end of 2023 calendar year and into 2024. So we love the fact that the government is looking to reduce red tape. We'd just like it to happen faster. So payroll tax, we hate the fact that people have to pay payroll tax. It is the worst because you should be rewarded for employing people as opposed to having to pay an additional tax. But payroll tax hopefully will become easier in 2024 because the government will be sharing that single touch payroll data with the actual revenue officers. So we'll wait to see how amazing that is.
And probably just also a good time now to actually talk about some announcements that have been made in prior budgets. They're actually now coming into play. So Steph, tell us about the actual $450 super issue.
So if you're a over 18-year-old person, you basically had to earn $450 a month before super would accrue for you. So if you were always earning $400 a month, as an example, your employer didn't actually need to pay super on your behalf. That has been scrapped, and from the 1st of July this year, no matter how much money you earn, as long as you're over 18, you will be accruing super, which means your employer will need to pay that super for you. There's also an important note for the 1st of July, basically for all employers.
That's right. So everyone remembers we've got to pay the 10% super now on the super guarantee on wages. That's actually scheduled to increase to 12% by the 1st of July 2025. So from the 1st of July this year, it will be going up to 10.5%. and that will be going up in increments of 0.5% until we reach that full 12%.
So we'll definitely need to make sure that that is taken into consideration. Obviously, Xero does a great job of automatically putting that in there. For any of you that actually have inclusive of super contracts, though, we will need to change that just in terms of what that wages and super split is for employees. But effectively for businesses, that's adding an additional 0.5% to your payroll costs for the next 12 months, and then an additional 0.5% for the next few years as well.
That's right. So last night, the other big thing that they were talking about, obviously being an election year, is spending. Where is the money going? What are we spending the money on?
So there were some good announcements. We obviously talk about bringing back domestic manufacturing capability a lot in here, and certainly trying to get Australia up to the level that it needs to be from that capability. There has been quite a few $1 billion earmarked for things like the modern manufacturing initiatives, some regional accelerator programs, which is so exciting. If we can get more money in our region here for some of that great manufacturing initiatives, that would be fantastic. So it's exciting to see, and we are literally talking about billions of dollars over the next 5 years in spending. So fingers crossed some of these things actually get passed and we can start to utilise that money. But exciting things to come in that manufacturing space as well. Now, let's move on to self-managed super funds and super in general.
Yeah, so I think if you look at some of the papers this morning, they'll be saying it's the great untouched. So there wasn't actually too much to report in terms of super, but it's also a good time to actually recap what's previously been announced and is now in play. So one of the big considerations people have was if people are in pension mode, so if you've stopped working and starting to take a pension, in the last couple of years you've actually only had to take half of the regular amount. The government announced last night that that's actually going to continue for another 12 months, which is good news for people who are trying to preserve that hard-earned capital and not have to take it just because a regulation tells them to. So they may have been doing that anyway just because of the cost of living, but at least now they have the option to do that or not. We've also got some legislation that's now in play that allows people that are over 67 and up to 75 can actually put some of their savings back into superannuation to top up their balance. Now, previously that used to require you to pass what we call a works test, which meant that you had to be working still to be able to do that. That legislation is now in play from the 1st of July this year, that requirement's now being scrapped. So that's actually great news for self-funded retirees in particular that are actually looking to boost that amount of money they've got in that savings pool for retirement. Which
is great. And that's one of the things that has already passed in terms of legislation. So thumbs up for that.
And there's also one more, and it's a big thing for people that are trying to reorganise their finances as they approach those retirement years. And that's previously we had this downsizer contribution where you had to be 65 to be able to put that money in. That's actually reduced now to the age of 60. So people that have been planning that new lifestyle in retirement can actually start triggering those things a lot earlier.
Which is great. And then that leaves us to the last part, which is basically what's in the budget for individuals.
Yeah.
So there's a lot of things in the general media this morning about more money. For what's classified as Lamington, which is the basic offset that was introduced a couple of years ago. Now, there's been an additional $420 per person earmarked as an offset as long as your income is less than $126,000. That's taxable income, less than $126,000. Now, a lot of the media are actually reporting that this offset is up to $1,500. Whilst that is true, we all have the $1,080 already in our pay packets on that weekly, fortnightly, monthly basis, depending on when you get paid, because that was already factored into the actual tax tables and tax rates. So $420 coming your way as part of your income tax return, as long as your income's under $126,000. Do not expect $1,500 though, I think is the key message here.
And don't expect your pay to change between now and the end of June.
The bad news is that from the 1st of July this year, that actual offset has been discontinued. So last year it was actually brought forward because of COVID. We actually brought a whole host of things forward. So from 1 July, that offset is gone, which means you will actually pay more tax in your normal pay packet. So just a word of warning there. There's a one-off cost of living payment coming up as well. That's $250 to be paid in April to eligible pensioners, welfare recipients, veterans, and some eligible concession card holders. No details of when, but just that will actually be paid in April, which is great. In exciting news, there's a temporary fuel excise relief. So we're going to get some money back for our fuel. Last night on our Facebook page, there was a little bit of banter about what to use that money for. Alan's definitely voting McDonald's. The rest of the GrowthWise team said that it should be variety buckets from KFC. Personally, I think you should be spending that on something much wiser, but feel free to head on over to our Facebook page and tell us what you're going to spend that money on as well.
And it's also noted too, it's not meant to actually hit the Bowsers for a couple of weeks. Even though it's in play now, it's going to be a couple of weeks before you see that.
The other thing for individuals is all in relation to the Home Saver and Guarantee Scheme, which is for first home buyers. Basically, this has just been extended. So there's an additional number of places. So at the moment, the Home Guarantee Scheme is capped at 35,000. That's going to be extended to 50,000 places. And it simply means that the government basically does a guarantee. So a bank's more likely to lend you money as long as you've got a 5% deposit, or if you're single, a 2% deposit. The only other two things, I guess, to note is paid parental leave is set to actually change. It's not set to change till the 1st of March 2023, so we've got a little way to go. At the moment, as the mum, you get 18 weeks of paid parental leave, and as the dad or partner, you get 2 weeks. That's been combined so that together you can take 20 weeks of paid parental leave, and you get to decide who is actually going to take that leave. And that means that the collective household income can be up to $350,000 in a year in order for you to qualify.
Sounds a lot more flexible.
Definitely a lot more flexible. And the last thing that we actually already knew is any of your COVID tests that you are paying for yourself are a tax deduction. So if you have to do a RAT test, as an example, in order to go to work and you've purchased that yourself, then you'll be able to claim the cost of that in your personal income tax return. Point to note, you need to have kept the receipts. We expect that the ATO will do a lot of auditing if you do try and claim a ridiculous amount. So just be mindful that you do need to have those receipts as well.
Excellent.
And so really, they were the only announcements that came through last night. A lot of those were still add-on announcements to last year, as an example, and there's not a lot that we really need to look at changing for businesses. Certainly not much to change for self-managed super funds either, which sometimes is a good thing.
Yeah. It allows people they can plan, they know what they're in for, and they don't have to tweak those changes if something comes up with these announcements. So it's a good thing.
Which is perfect. So we'll keep you updated and informed as these things actually get passed, and we'll be in touch with some tax planning in terms of when it actually is a good time to take into consideration some of that skills and training, and also the digital incentives that are available as well.